Sanjay Sethi joining in. He's MD and CEO of Chalet Hotels. Sanjay, very good morning to you and thank you so much for speaking with us. You know, I think when you have so many moves to put money in people's pockets, then that's a tide which floats all boats. Is that how you're looking at it, or have you done that split of plus 7,500 and below 7,500 tariff? Tell us how you're looking at all of the moves.
Tamanna, Neeraj, pleasure to be back. Great summing up by your co-host earlier in the session. I just want to correct one thing. I don't think we've given any guidance of 90% occupancy at any point of time, so I'd like to just correct that. On the GST, solid announcement. I think it covers all the aspects of Viksit Bharat and Sabka Vikas, and I think it's ticked all boxes on that front. And I think to a large extent, this sort of propels and adds to the tailwinds that the hotel industry has had over the last few quarters to only supplement the strength on the demand and supply side. Coming back to the tax structures, this 12% for 7.5 for with ITC for 7,500 is a new input to me today. Let me figure that out. As I understood it, it was non-optional. It was 7,500 rupees and below at 5% without ITC. If that's changed, I think it gives a lot more flexibility to people. To answer your question, very small part of Chalet's room nights are sold below 7,500 rupees. So we don't see a material difference to us.
What proportion, Sanjay, if there's a figure at all?
It's in single-digit percentage numbers. Okay. It's as small as that.
Would there be? I'm so sorry. Just to understand this, and then of course, please go on. Would there be a reason to maybe reprice some room rates for the GST benefits? Would that make any sense at all for you?
Not at all. We are a forward-looking company. We'd like to work on growing the business, not working in a negative fashion. We see no reason to do that. As I said, a very small percentage anyway will get affected. Even if I bring down by 500 rupees, I don't think it covers any extra material numbers with that reduction in tax. I do want to come back and cover my piece a little bit more. 5% GST for consumers that are paying below 7,500, great for the consumers. And I think it's the right move to work with the demographics that India offers. And as I said, to give further tailwinds to the hotel and tourism industry as a whole. I wear two hats, one as the MD and CEO of Chalet Hotels, but I also wear the hat of the Management Committee of the Hotel Association of India nationally and the chair of the Western India CII Tourism Committee. And I think from that second part of the hat that I wear, it's important for me to point out that I see no reason why ITC should have been withdrawn at 7,500 and below. You've got to remember 7,500 rupees has been a static rate, cutoff rate for many years now. So I think there are three things that we still need to work with the government on rolling out. One, bring back ITC to tax structures which are at 5%. Two, get the 7,500 increase because there's been no increase for quite a few years. And I think the right number there would be what, a 12,000 number. And then to end this debate forever for future, I think we should link this cutoff price to the CPI so that we don't have to discuss this ever again, what the right number should be. So these are the three recommendations I have. As far as Chalet is concerned, nothing materially changed on the GST front. What has changed is the additional liquidity in the hands of the consumers will add to the tailwinds.
Fair call. Yeah, I mean, even at the GST conclave, the ITC was one big talking point. This thought of linking it to CPI is interesting. The number of 7,500 versus 12,000, though, Sanjay, debatable for most people. But I take on board the point. All the best with all those conversations. The second part of the conversation is, since you mentioned that GST is kind of no major changes, is to occupancy. Forget the 90% number. But what caught me personally by surprise and a few other people by surprise was that at least I anticipated that the April, May, June quarter would have suffered on numbers because of lower tourism, because of the events in May, so on and so forth. it didn't seem to be the case. So what happened, and what is the current quarter looking like? Because we know that October, November, December will be strong. The question marks are around July, August, September.
Yeah, Neeraj, spot on. Every year H1 is a little more difficult half than the second half. Quarter one numbers have been reported by almost all listed companies, so you have those numbers in front of you. Strong quarter. Quarter two has had its own challenges, especially as your previous speaker was sharing. Monsoons have been a bit of a downer in many of the cities across India. And pan-India numbers that I see out of the monthly reports that come out from consultants indicate that some of the cities have faced challenges on that front. Business travel has been robust. So from our Chalet's perspective, we see steady growth coming in. Going forward, we don't share forward-looking numbers. I can't share quarter two numbers as yet, but H2 looks very, very bullish.
You know, Sanjay, I just want to go back to a part of the question that I started the conversation with. Do you see discretionary spend and the propensity to discretionary spend improving be a benefit to you? So if people are going to save money on everything from toothpaste to toothbrush to their cars to XYZ, do you think that that increases the pool in people's pockets to spend on hotels? Is there a secondary impact that you are penciling in?
Undoubtedly, Tamanna. In fact, that's why I'm saying there is a further impetus to the tailwinds that the industry already has. This kind of liquidity in the hands of the consumers is going to help the industry overall.
Okay. And what is the kind of outlook you see on this? Is there a number penciled in, or is this something that, you know, we're very broadly hoping to happen?
Look, we continue to hold the double-digit RevPAR growth story for India for the coming few years. And that's a good number to have. Costs are growing at about 5.5%, 6%. So we should continue as an industry to continue to add to the margins that we deliver. And Chalet has been no different. So overall, my belief that the industry is in good for a great next 3 to 4 years continues to stay. If anything, it's become stronger after this announcements on the GST front.
Let me come back to those occupancy levels in the question there. I think the place that we have picked this up from and we're talking about is the transcripts of your conference call, where this 90% occupancy was talked about. You're now saying that it is not 90% occupancy that you have in mind. So then what is the occupancy? What are the kind of timelines you're seeing?
I still don't recall ever saying that we'll hit 90% occupancies in our portfolio.
Okay.
We did have a reference that airport hotels tend to deliver very good occupancies and sometimes in excess of 90%. And maybe this was picked up maybe about 4 or 5 quarters back. But that was a specific reference to the Delhi airport hotel.
Okay.
Which is not operating at the moment.
All right. So let's keep that aside. What are the kind of occupancy rates that you're seeing going ahead?
So look, whilst the rates have grown very strong, we've seen some sort of slowing down the occupancies given the elections and the events in May, and then the monsoon period that we've witnessed. And I think a couple of consultants have released their reports for the last four months of the year, 4 or 5 months, and all indicate that the occupancies have been flattish, in some areas actually negative, but the rate growth has more than compensated for that gap. And most of the country is delivering very healthy RevPAR growths. On the occupancy front, once we get into the H2, we expect them hitting back to the high 70s as we've done in the past.
Sanjay, I wonder what your thoughts are about over the course of the next 1 or 2 years to the non-room revenue part of the business, because I keep on hearing different opinions from your peer set over the years, right? One chain very constructive, one chain not so much, someone in the middle. What is your sense for your group about the non or the F&B or the MICE segment vis-a-vis the room revenues as a proportion?
So Neeraj, I think that's a factor of the location and the category of positioning the hotel that you operate in. So you will hear different points of view from different companies. In our perspective, 90%, more than 90% of our portfolios in big city, big boxes. where we get a very healthy room revenue because the ADRs and occupancies are significantly higher than leisure hotels. And therefore, sometimes the room revenue is lopsidedly high. At our portfolio, we've hovered around the 33 to the 35% of the total revenue coming out of F&B, and another about between 6 and 8% coming out of other income, which is spa, travel desks, etc. So the room revenue has been typically been around the 60% mark, 60 to 63% mark of the total revenue for Chalet. And it's been consistently like that for us. Within the F&B, which is, as I said, 33 to 35%, about half of it comes from the MICE business.
Okay, thank you so much for speaking with us. That's management of Chalet Hotels.